calls and puts and all expired, and you know, we placed I think 17 trades in the last 4 weeks, and 15 of them were successful. We've booked our profit in full on those, and two have been under pressure, one being Twitter and one being Yum. So we're going to focus on the Yum trade here today. So let me talk you through what we did first of all, how we went about managing it. What we've done today, we've closed down one of our positions, and what we're going to do tomorrow. So you'll be well set up for the weekend. You'll know what to do for yourself. So the first thing we did was these two trades here, trade one, trade two. That was a short strangle on Yum just before earnings. We traded between the 70 and the 87. So if you remember correctly, after they did a good earnings report, shares jumped up to 85. Wasn't a big deal. That was fine. But then an activist investor basically made an announcement they'd taken $1 billion stake in the company, and then the shares kind of jumped dramatically, and that threw everything off course. So what we did then, we came in and placed a third trade, and we sold the $85 put to reduce our loss position on the particular trade. So at this stage, the shares were trading up closer to 87, and we decided, okay, we'll sell the $85 puts as cover, because at that stage the $70 puts were never going to be assigned on those, so we could afford to go and do that. Then the trade kind of pushed past 87, and what we decided to do was to buy the stock to cover. And then we had all the technical signals and all the usual signals after earnings that profit taking was in play. And what we did then was actually buy back the shares, because we really felt at that stage it was going to finish below 87. But then of course, then there came along that announcement from the billionaire investor, and you know what, the shares jumped on us. So we immediately went and sold more puts at the $90 strike, because at this stage the shares of Yum were actually at about $94. And it was highly unlikely those $85 puts we were going to get assigned on. So what we did was we sold more puts to reduce our loss position on it. Then a couple of weeks later, we bought back the 85 puts to close out that position. We bought them back for 1 cent at a profit. And then today we've gone in and placed this trade. We've actually bought back the $87 calls for 330. So if you were to add all them up at the moment, you will see this is what our position is right now in terms of profit and loss. So we're down 152 per share at the moment. We got a slightly better premium than I'd previously just posted on the Yum call. So we're going to now try and further reduce that loss position on a per share basis. We're actually going to roll. We've one position left open, which is our short $90 put. This position here is still left open. Now, I'm going to bring you into the trader platform right now. First of all, I'm going to show you the trade I just placed. And you can see here we bought the 5 Yum, $87 calls. We paid out $330 for them. So we're moving on from that call position now. We have a slightly bullish bias on the stock, but I don't want to be short the puts at $90 anymore. I'd rather roll that down a bit. So if you look at our short puts here, there's two ways we could go about doing this. We could literally close this position out here right now today. Now these puts aren't due to expire till tomorrow. As it stands, the shares are above $90. So this could actually finish up you know, $190 more in profit on this particular transaction here. So the mark value at the moment is $190 on it. So if we were to close that now, you're talking, there's still a bid-ask spread on this, you can see, of 30-35. That's actually all-time value. So there's no point in closing down and rolling this position now. If we just be patient, wait a day, we'll be able to basically let that expire worthless tomorrow and open up our other $87.50 put position that I'm talking about. So just to clear that up again, the reason I'm not closing down the put side of this trade is that there's, in my view, there's too much time value left in the put. And I would rather see all that time value erode rather than paying for that now. There's no need for us to pay it out. So that begs the question in your mind. You're going to be saying, well, what happens if the shares fall below 90 between today and tomorrow? Well, let's go and have a look at the option prices for Yum. So we got to type Yum in here. So we got the chains for Yum. So these are the we'll bring it again. We'll bring up the puts here for $90. You can see it's going to cost about 37 cents to buy them back. I'm not paying that. The shares are at 90.21. If they finished at 90.21 tomorrow, that would all just disappear. So I don't believe in paying the premium when we don't have to. So let's roll out then to June the 19th. And this is what we're actually going to do. We're going to sell the 87.50 puts. And we're going to collect in here about 115. So it's actually gone up a bit. So we're going to collect in about 115 for the 87.50 puts. And we'll do that tomorrow. But we will wait till tomorrow to do that, because we don't want to be short 87.50 puts and $90 puts tomorrow, just in case there's a reversal in the shares tomorrow. So what if there is a reversal in the shares tomorrow? Well, no big deal. We'll still end up buying back our $90 put that we currently own. We'll pay a little bit more to buy it back, but that will be more than offset by what we're going to get by selling the 87.50. So if the $90 put goes up tomorrow because the shares fall, we won't be buying back any of the time value. We'll literally be buying back the real value in the put. And this premium on the 87.50 put for June will be greater again. So this is why we're waiting for the put transaction for tomorrow. It's just simply too expensive to buy it back today. Paying 37 cents in time value a day before expiry is nuts. So we're just going to leave it till tomorrow to finish off that trade. So if you want to close down your calls today, there's no time value in them. I bought mine back for 3.30. There was about 5 cents of time value. So I was happy to close that down. Okay, this is Stephen from Share Navigator. Just an update on the trade.